Hey guys, it is Julie here with TipRanks. In today's video, we're looking at two stocks that were recently picked up by billionaire Ray Dalio's hedge fund, Bridgewater Associates. So let's get into it. All right, guys, welcome back, and thank you so much for being here. Like I said, today we're taking a look at two companies who were recently purchased by Bridgewater Associates during the second quarter. Now, analysts rate both of these stocks a strong buy with some pretty attractive upside potential. Just before we get into these two stocks, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's get into these two companies. The first company we're taking a closer look at is TWOU Incorporated. Trading under the ticker TWOU, they're currently priced at $37.80 per share. TWOU is an educational software and tech company. They operate as a contractor, provide a cloud-based SaaS platform, infrastructure support, and even coursework design to nonprofit colleges and universities, allowing these entities to take their degree programs online. TWOU got their start 13 years ago, but the focus has really shifted to online learning over the last couple of years. In the last 2 years, they've seen their revenues steadily rise and have been expanding their network. They currently have 550 offerings through 84 different university partners and have over 350,000 registered students and over 260,000 graduates. They are a trusted brand steward and the partner choice of the world's top universities. Just this month, they've announced new contracts with the University of Oxford in England and with Howard University in Washington, D.C. Back at the end of June, the company announced that they would be acquiring the assets of edX. In a deal worth $800 million, they'll be acquiring edX's assets, including the edX brand, website, and marketplace. Together, TWOU and edX will reach over 50 million learners globally, serving more than 230 universities and corporate partners, and offer over 3,500 digital programs on the world's most comprehensive free-to-degree online education marketplace. In their recently shared earnings report, TWOU posted strong second quarter results. They saw their revenues hit $237.2 million, up 30% year over year, and the 8th quarter in a row of sequential gains. Earnings per share came in at a loss, not uncommon in the tech world, but the losses have been moderating in recent quarters, and at 29 cents per share, the current loss is the lowest in over 2 years. Despite the sound results, the company did keep its forward guidance unchanged from last quarter, predicting revenue growth for 2021 between 19 and 23%. Dalio's hedge fund, Bridgewater Associates, picked up over 130,000 shares of the TWOU stock in their second quarter, bringing their stake to about $5 million. One analyst covering the TWOU stock from Berenberg Bank is Brett Nablock. He says that TWOU reported Q2 results that we would describe as better than expected, but management's decision to leave guidance unchanged was a slight disappointment. However, we believe the long-term story remains intact, particularly when accounting for what edX brings TWOU, and valuation remains extremely attractive at current levels given TWOU's positioning in the market. Brett is among 7 analysts that have a current rating on the TWOU stock. And as I mentioned at the beginning of the video, today's stocks all come in as strong buys. With 6 buy ratings and 1 hold, the average price target comes in at $62.50 per share. This would be a 67% upside potential for the next year. Taking a look at our detailed list of analyst forecasts, Brett's price target of $78 is the most bullish, as it would be an upside of 108%. On the low end, we do have our hold rating from Morgan Stanley at $55, which would still be a 47% upside potential. The second company we're taking a closer look at today is called OneLife Medical. They do business under the company name One Medical. Trading under the ticker ONEM, they're currently priced at $23.65 per share. The company offers in-person, in-network primary care, pediatric and family care, mental health care, and virtual consultations through a network of more than 100 offices in 12 U.S. domestic market areas. OneLife works as a provider for over 8,000 organizations. With a $200 per year membership, their virtual offering is a major selling point for the company, as it brings telehealth to the primary care universe through a mobile app. Patients can book appointments and renew prescriptions, have remote doctor visits over a video link, or just exchange messages with providers and get reminders about appointments, lab work, screenings, and vaccinations. The company is actively working to expand their network, and in June they announced that they've entered into an agreement to acquire Iora Health. Iora Health is a primary care group focused on the Medicare population. Medicare, which serves primarily older Americans, is certain to see strong growth in coming decades as U.S. demographics age. The acquisition will be conducted through an all-stock transaction worth $2.1 billion. Now, just a couple weeks ago, on August 4th, OneLife shared their most recent earnings report. Their second quarter ending membership count came in at 621,000, which was a 31% increase year over year. Their net revenue came in at $120.4 million, a 54% increase year over year, and they have cash and short-term marketable securities of $653.8 million. Ray Dalio's fund purchased the OneLife stock for the first time during the second quarter, buying over 137,000 shares for a stake that's now worth about $3.25 million. One analyst covering the stock is Elizabeth Anderson. She said that One Medical delivered more than the admittedly low expectations going into the quarter, with membership, revenues, and EBITDA all a beat. Looking ahead to Iora in 2022, we're tweaking our estimates as we await the closing of the deal, but are broadly positive on the increased profitability profile for the standalone ONEM business, despite the continued growth in centers. Overall, we see them continuing to grow at mid to high 20% organic rate with an improving EBITDA profile. Elizabeth is one of 11 analysts with a current rating on the OneLife stock. Coming in as a strong buy, it has 9 buy ratings and 2 holds. The average price target of $40.50 per share would be an upside potential of 71%. Some of the most bullish ratings are a few months old now, some of them up at 166%. Looking at some of the most recent from the last couple of weeks, we do have a high-end price target of $46 from Citigroup, which would be an almost 95% growth potential. On the low end, we do have our hold rating at $31 from Robert Baird, which would still be a 31% upside. So there are 2 strong buy stocks recently picked up by Ray Dalio's Bridgewater Associates. Now, let me know your thoughts on these 2 stocks in the comments down below. Were these already on your radar, or are these brand new to you? And what do you think about the stock's future potential? Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you all so much for watching. I hope you have a great Monday, and I will see you back here next time.